Are you ready? I said, are you ready? Then, for the hundreds in attendance, most of you watching at home, let's get ready to look at charts. And it's going to be US oil that I want to look at. I don't invest in such. I find it very difficult because where do you store it? Oh yeah, you could buy the banking codes and such, but I limit the amount of fiat currency I have within the financial system. I would say as a general purpose for safe investing. 1/3 banking related, 1/3 crypto related, 1/3 precious metals related. This way you got your grounds covered. Some may do well, some may do poor. Of course, banking related is having cash, stocks, anything you buy and sell amongst any of those types of markets. Precious metals, mainly gold and silver, and of course cryptocurrencies. I've talked a lot about those as well. But this oil chart is really a good one to talk about for technical analysis purposes, which is why I've decided to cover such. Although, I guess via gasoline prices, I kind of involved within the market. A lot of people are. Have you seen your gas prices going higher? Yeah, you think they're going to go much higher? I've had a number in my head for well over 1 decade, and that's $1.33 Canadian per liter for gasoline prices, because that was the area of prices that I'm in when Hurricane Katrina came in. Those were obnoxiously high prices that was way too high, and they came back down way fast because of that level. They went significantly below $1 in time, significantly above $1, but now they're hovering and staying around that 133 number right now. And I'm expecting it to break that resistance, so I'm expecting gas prices to continuously go up 20-30% even more, most likely, as we head on further. Okay, so I drew this line in, uptrend line. And this level of resistance has kind of been support. And when I say kind of has been, it has been such. And when looking at this as it plays out, it's had a beautiful uptrend. This has been a nice sideways consolidation that looks like it's ready to leave it with continuation further gain. That's what I am reading from this chart. Let's continuously go step by step further. Next time frame is the single hour. What do I see here? What I see? I was going to say, what do we see? Because I'm not too sure what you are seeing. This level of resistance, in which encountered from the decent red move lower, significant hours going sideways, significant move, the U-shaped, V-shaped formation that failed sell-off, if you will, and then it rallies higher. So it definitely could tell me that it's got substantial gain. So from this breakout in here, this sideways move amongst this level of support, very productive. But even more productive is how it's now how it's hanging in there within the rising 18, basically screaming out that it's got high potential for some superior gains. Let's change the time frame out even further. Let's next go to, we'll do the 3 hour. And it's showing more continuation of this last move, because when it got up to the $70 level, it was at points not seen in many days. And it sold off, well, within the lower end of some of its support level and a very small amount of its resistance level. It came down to quite a bit. But to give this selling move back, and it shows you here the potential of a failed move, fast move. Oh my goodness, this setup's going to be big. that's in place. Daily term time frame. Actually, oil moves like all the time, does it not? It trades like every hour of the day. Because I'm usually with stocks, I go 3 hour then day. But if it's like, yeah, let's do 400 minute. Then we'll do daily. This is huge. Okay. From this point in here, the market has a very good rally, leaving the 18 average, reverting the trend, correcting through time. Enough periods where we see how it has this big support where this lower line was drawn within the 18 average, and then when it breaks it, it has a very good move and a decent leg higher. This decent leg higher ended up being a 3 times hit level of resistance. This level of resistance that it originally got to, I'm not going to draw the line further, but it was obviously a support range. From 69.33 as resistance and 66.83, so about a $3 range in the high 66 to the high 69 area. Maybe 2.5, whatever. It was the range was in place, and we can see it's gotten above the range. It came back. It went well through it, but did nowhere near did it hold and stay below. In fact, seeing a move like this is like an enthusiastic situation because it really does tell you the potential for what could be coming as we're moving forward. Daily term time frame. And that sell-off, that quick move, came back down to the 18 average of lows, which we can see had a rally ending last year that came into obviously the start of 2018, a little bit of a pullback going through the 18. And this is, again, when you have a situation when the market has an amazing increase. You have this empty space here. If you have a sudden harsh move going below it, you still got to give the buyers the benefit of the doubt, or whichever move made it happen first. In this case, the buyers are the uptrend. And you can see in this example how it worked out. It really had an extra move lower where if you were trying to fish for a bottom by buying at like 61, even though buying at 58 low change was available, well, how's 61 looking today? Or obviously you could have, there was many opportunities to sell and buy back and all that stuff. But if you buy low and on what moves lower, you hold / buy more, you can see how in time, often points, you're going to be able to get your reward or your gain on your transaction, even though sometimes you'll have to wait it out. Okay. I like to say that because this is, again, just learning more about the charts, because a lot of the people watching this video are trading the cryptos, but a lot of the information that you can see through this can work in the markets for cryptos as well. And this thing is just making a new leg higher as it stands out after this move. So bull market's in place. You got to think that's going to have a decent leg, but now you have to figure out where's it going to go to. Well, let's go to the 3-day time frame as the next place to take a search for. And there's a line in at 53.99, basically 54. Oh, there'll be a higher line. We'll soon see what that next key level is. But it's been in an uptrend ever since the almost a year now, ever since the end of the spring Northern Hemisphere of 2017. Within such, this has already broken past a level of resistance at 66.23, where it had its best correctionary move. We'll call it a half-assed move, but hey, if that's all it needs at this point, that's all it needs. We still have higher time frames to look at, so let's move on to the weekly chart. And within such, it's just breaking this level of resistance. You make a move higher, you come back to the band. I'm counting like 8 or 9 or so periods within the 18, so a very successful, productive correctionary move. And when you see, look at these 2 periods after the green candle, those are telltale signs that the move is probably for real. You might consider that, ooh, maybe I'm going to hold off selling, or I'm going to hold off selling more. Maybe I'm going to look to buy, all those kinds of things, because I do not usually like passing on selling above the 18, at least when you're not selling any, that is, because there's always a limit to how much you should sell, I think. But I'm always an advocate, sell above, buy below. But there's times where buying above the 18 just makes sense. Monthly term time frame. 79.23. That's the next key level. It's almost a certainty as I'm looking at it, it's going to make it there. We'll see, but its level is a 76.4% long-term number. I'm not done on the monthly chart. We're going to go to a quarterly level after this. But there you have your decline after price action, which was over 110. Spoiler alert, it was even higher not long before this. In fact, I'll just scroll a few candles. There we go. There we go. So, horrific move down. But if you think about my buy low, sell high strategy, if you would have been, let me just get a little symbol here. I don't know which one I want to use. What looks good? The letter B for buy. You know, I was just going to come out and say, like, this is a little joke. Hey, I got this cool program. It's back in 1999, I remember getting a programming language that I put on, I think 46 discs. But if, say, you bought here, and then you bought some more there, it meant that it might have been very hard to sell this here, but it would have been very easy to sell this, maybe even here. Whatever you sold during the first 4 years of the decade, buy back, and now it's time to sell. So if you bought here, you're going to be looking to sell maybe up somewhere there. Uptrend, downtrend, markets go up, markets go down, markets go sideways. But if you do buy, hold, and wait, as long as it doesn't work out basically going to zero or anything of the like, and you're in it for the long term, thus holding, it will work out for you, mathematically speaking. But as this market is playing out, it's in its current phase of making its move up to 79.23. The areas in which, is it too late to buy? It's starting to become so. Eight more points higher. That's like little over 10%. That's what's left. I don't know what it's going to do when it gets there, but I'm pretty darn near confident it's going to get there. Now what we're going to do is take a look at this on a 3-month time frame. And this is going back to 1983. So we got 3 lines. I'm missing one. It's because I don't think it's needed right now. That would be the 23.6 number, which should be hanging in there somewhere around 20. And it isn't needed right now. It hasn't been. For it recognizes this low and the high. So during the big crash in 2008, it crashes through 23.6. It crashes through the 38.2% down move, falls below the 50%, not quite to the 61.8% level. So it rips through 2 of the 4 key levels that it needs to go through on the retracement part. 50% I don't count as one, but it's a decent one to have in between the 2 big ones, halfway point. And then when it has its move higher, you can see just on the individual period that when 2009 begun, that level was hit. And I'm just thinking to myself as I'm saying this, Let's take a look. So this is, I can go back to this. I'm going to go to daily time frame, and I'm going to scroll back, and because they give me a lot of data to go back through. I have the most basic paid for version amongst this. So what I do is I scroll back as much as I can like this. Well, they'll let me do it quite a bit. And then I'll use my mouse and bring it over to the right hand side. So now I can actually take a look at the fall from this point of view on the daily term time frame. So it had support for 1 day on oh, I love that. So October the 10th, that was a crash day. I can remember waking up that morning. I hit my target of 8,000 Dow. I got out of my second and only short position I had for that year successfully. Of course, crude oil kept going lower, and it didn't have as much. The stock markets rallied big for a few days after this. I think the Dow Jones had like 1,000-point day or something the day after. It was crazy. It was crazy. But anyway, that only supported for 1 day. And then it came down, and there was no support when it came there on November the 19th. Rather, it resisted it, met up with the 18 average, seen as it falls, below the 18, big down move and continuation. Perfect resistance amongst the key fib line, comes back to the 18, resisted again. This is 53.99. What's the high here? 53.90. What was the high on this point? 54.05, 54.20, 54.18, got up to 54.66. And then it got above it. So it had a day where it made it to that point. Technical analysis, when you see something like this, key level resists, have your correction area move like this, you have your move to an area, because oftentimes this is what I'll say, when you have a move to a level, you have a successful correction, and you're making a move back to key level, you're expecting to have some sort of resistance, but this thing could just go too. And when you see after 1 day that you just have a straggler hang in there type of day, which is the case, you can't be too surprised to see follow through for which took place. Markets go bullish. And look at 79.23 come into place in 2009. How it just resisted it, came back, and here's that example again, where you have a major level and then you have a price correction like we did at the end of 09. You come to this level again on December 28th of that year, and then look at how these days are spent above or correcting the move. Now, I have a very difficult time buying 6 days consecutively above the 18 average of highs and still well below it. But in this example, it was only available for small gains. Ultimately, it would chop up and down below it, but let's go now back to the quarterly time frame as we can view it for today. And this is all the data they got, so this will work out very well for me. And with the market going sideways throughout the 80s and the 90s, basically through my childhood and early adulthood time frames, my example, and anyone else who's in their early 40s, the resistance level seemed pretty clear around 37, 35, 33. Because you came up to it in 1990 with a decent pullback. 2000, I guess the Y2K scare, market top, then it pulls back. And then after it pulls back into the 2001 October lows, which was significantly higher than the previous support at 10 3/4, this little move in here in early 2000, basically 2003, as it's supporting, playing around within this. Of course, this Fibonacci line wasn't in place at the time, but it was a key level, obviously, at around 35, and then it had its break in 2004. I mean, we're due for inflation with the fiat currency that we're having, and you have a decent size move, looking at this logarithmically speaking, going from $40 up to about $145. So since that top, it has not had much of a test of it, because the big fall, as I was talking about this Fibonacci levels in here, it managed to support it in 2011. And as it was lifting higher, the market would have been looking relatively big here. But if you were waiting for it to clearly get above a key level, which would have been around 116, 117, well, it never would have got there. You never would have bought it, and you would have missed the entire loss of your portfolio go down, which is obviously a good thing. Being able to buy at a cheaper price. If you bought at, say, 54, thinking, you know what, this is just way too cheap. It's October 2014, you buy it, but you can't sell much, and then it crashes again. So you buy more the next key fib level around 30. Well, you could have sold that 30 now easily. And that 54 you bought, well, you're in a winning position now, but I'd be still waiting to sell it at 79 because it looks like it's going to make it there. That's what I'm saying. Waiting game. If you're in a spot where you're playing your portfolio long term and you're buying something at whatever price, like this example at 54, and you now wait almost 4 years later, and you're now finally seeing it in a 30% surplus gain, and you were used to seeing it before in losing positions, break-even positions, and even for the last couple or 5, 6, or half a year ago, whatever, barely up and all that type of stuff. It's just the waiting game. Because what a lot of people end up doing is, they buy, oh my goodness, it looks bad, it's losing position, let's sell at 39, 38 or whatever, and they're out. But those who wait are able to win long term. So when it gets to 79, I'm not going to make any predictions at all. Other than, what does Fibonacci normally do? Because to me, I don't know any way of figuring out how the play would be correct unless you get into fundamentals. Because you're at a stage where if you don't find resistance, maybe you find support there, and maybe you do this range again, maybe between 79 and 110. Maybe you have continuation fast move higher, because if you don't resist or support this level, it's usually big size green candles higher. And if you resist it, I'm looking for support to come into the 54 area, next key line below. And then at that point, same name game again. I don't know what the next key level is going to be, the 29 or the 79. Or if it's going to be, I just don't know. But I do know now that the odds of hitting 79.23 within this move it's currently playing through is pretty darn near good. Thank you for tuning in, and have yourself a great day. Bye-bye.